This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, August 16th, 2023, and of course that means it is DCA Wednesday. Are you ready to grow that stack, you sexy sat stackers? I was going to say it is really hot outside, but right as I was getting ready to hit record, the sky got kind of dark. It's looking really black out the studio window. And sounds like there's a thunderstorm moving in. It had been extremely hot, not quite the 100 degrees it was last week, but in the upper 90s, and the humidity is back up a little higher than it had been. We're talking like 80% humidity. The dew point's like 83 degrees. That's a lot of water in the air. So I was out back and I planted a lemon tree today. I was actually really kind of excited about that because a long time ago I used to live in Arizona, and I had a lemon tree, and it produced lemons that were almost the size of a football. We're talking an American football, not a European football, because, you know, the size and the shape of a lemon, and especially that size, is more like an American football. Anyway, this lemon was amazing. You could make lemonade with it without any sugar at all. You could eat the lemon like an orange. You could peel it and eat the sections. It was just very flavorful, really sweet for a lemon. It was just an amazing lemon tree. Like I said, the lemons were gigantic, so it only took like a couple lemons to make a pitcher of lemonade. Anyway, we were out looking at plants because we had some of the jungle cut back in our backyard today, or yesterday, and we were looking for plants to replace some of the vines and stuff that were covering up the view of the neighbor's house. And we were looking at lemon trees just for fun, and I couldn't remember the type of lemon we had. And it was one of those things, I guess, like my mango tree. I was having a hard time remembering what type of mango tree I was looking for when we were looking for another mango. Because our mangoes are amazing too. They don't taste like you would think a mango tastes. They taste like you're drinking a tropical drink, like a fruit punch, like a tequila sunrise or something. It's got some pineapple flavor, some orange flavor, in addition to the mango flavor, maybe a hint of banana. They're just amazing. So I was looking for another one, and I couldn't remember what it was. So I asked the guy at the nursery I described the mangoes to him, and I asked him what he thought it was, and he's running down the list of mangoes, and he said Valencia Pride. And I was like, that's it! It's Valencia Pride. You know it when you hear it. And it was the same thing with the lemon variety. They had these Myers lemons and these Ponderosa lemons. And we were starting to think, okay, maybe it was a Ponderosa lemon because that says it's a slightly sweeter lemon variety. And then way in the back, there's one single lemon tree with a different tag on it. And it says it's a Eureka lemon. And it was like a Eureka moment. I was like, Eureka, that's it. I immediately remembered that we had a Eureka lemon back when we lived in Arizona. And I remember that distinctly because the lemons are gigantic. And I think that's kind of where the name comes from. Eureka! The exclamation, Eureka! Like, Eureka! These lemons are huge! So I just got done planting the lemon. I'm a little bit sunburned, was really hot and sweaty, had to sit down in the cool air conditioning for like an hour before I was even able to begin thinking about recording this podcast. And I'm glad I did because Bitcoin's dipping. I was going to say, did you buy the dip? Because earlier Bitcoin dipped down to like 29,800, but then went back up over 29,000. Currently, it's trending down below 29,000 again. So if you didn't buy the dip, but you're planning on stacking alongside us today, well, you're about to, because Bitcoin is on sale. Of course, zooming out, Bitcoin's basically in the range it's been all summer, but at least it's cheaper than when it was up to like 34,000. So maybe we're going to stack a little more sats today than we have been able to. Before we get into that, let's take a real quick look at the vital statistics. As I mentioned, today is Wednesday, August 16th, 2023, and that means at the time of this recording, we are looking at a Bitcoin block height of 803,511, 1,011 blocks more than when we recorded last week. Of course, that was a little bit late. So normally it's about 1,000 blocks a week, and that is certainly holding true. And at the time of recording, Bitcoin is currently clocking in at a US dollar value of $28,900 or 3,460 sats per filthy US dollar. And that is cool because last week we only scored 3,000 391 sats. And a couple weeks ago, we only got 3,295 sats. So we're going to get a few more sats for that dirty US fiat today when we do our stack. And this block puts us 36,489 blocks away from the next halving. As you know, the reward that miners get for finding the next block is reduced in half every 210,000 blocks. And the next, did you hear that thunder booming? That storm looks like it's really moving in. You know, when I was getting ready to do this podcast, I looked at the clouds off to the west because we've had some really impressive looking thunderstorms off to the west. And what's not unusual living out on the barrier island here, just off the coast of the mainland of East Central Florida, is we're about 16 miles from the mainland, and Interstate 95 runs down the mainland a little further than 16 miles away. And almost always in the afternoon during the summer, thunderstorms build up where the sea breeze collides. You get the moist, slightly cooler air blowing in off the ocean and the hot air, you know, from the sun baking the land, rising up. And where that does, where those two air masses collide, we get what's called the sea breeze thunderstorms. And they can be really impressive. One of the reasons why Florida is the lightning capital of the United States. But perhaps, I mean, this could be an advantage, but it's also sometimes kind of frustrating. You watch those thunderstorms every day just dumping torrential rain only 10, 15 miles away, but it doesn't rain here. So you're watching the thunderstorms every afternoon while you're out in the yard watering your plants because they're wilting. So I thought maybe that was going to be the case again today, and I checked the weather report, and it said, you know, there's going to be a 30% chance of rain around 8 o'clock at night, which is hours and hours away still. So I thought, okay, well, I guess it's going to be a normal day, but the skies got black and the thunder is banging, so pardon the lightning and thunder if it continues to get worse. Probably what's going on right now, the noise canceling will take care of, and you won't be able to hear. But it might distract me a little bit because it's starting to rumble out there. Speaking of distractions, I was just mentioning that we are 36,489 blocks away from the next miner reward halving, and last week that looked like it had pushed back a little bit. It had been looking like it was going to be on April 19th or 20th, and then last week, because of the reduced hash power, probably because of the hot weather in Texas, that was pushed back to where it was forecasting that the halving is going to occur on April 21st of next year, and now it's back to April 20th. So pretty consistently, it's looking like the next halving is going to happen on or around 4/20 of next year, April 20th, 2024. So if you haven't already, you should start planning on where you're going to be on that day, because the last halving, there were going to be huge parties all around the world. One of the biggest was going to be in Tel Aviv, Israel. And these parties were going to be the biggest Bitcoin gatherings that we'd ever seen up to that point. Of course, not as big as Bitcoin in Miami, where 30,000, the Bitcoin conference in Miami, where 30,000 Bitcoiners all got together, but still thousands of Bitcoiners, really impressive. And I'm assuming it's going to be the same this year. In 2020, of course, that turned into a bunch of online parties. Bitcoin Magazine had an online party that was pretty, it was like a 24-hour marathon on the day of the halving, waiting for the halving, where everybody was dialed in, participating online. And that, of course, because that's the way the world was going in 2020. But hopefully we're back on track, and there's going to be a Bitcoin party near you, or at least one that is so cool you won't be able to resist traveling to. I'm looking at Bitcoin parties out there and dreaming about where I'm going to be next spring. I think it's a little too soon for me to think about traveling anywhere, but man, you Europeans listening have some really, really cool parties. I'm hoping maybe they'll have a really cool party in El Salvador, maybe one at El Zante. Perhaps it'll be the next halving after that, the 2028 halving, before I finally get to one of those huge international halving parties. But I'll be celebrating somewhere, and hopefully you will be too. Back to the vital statistics. Bitcoin's currently looking at a total market capitalization of $562.4 billion. Of course, that's down a little bit from last week, but solidly in that 5.5 billion, 550 billion. I don't know why I'm having a hard time spitting that out. It's not exactly a tongue twister, but in the range of 550 to 590 billion, where we've been pretty much all summer. I think we dipped as low as 512 billion back in June, and we saw almost 600 billion there at one point in time in July. I think we got up to the mid $590 billion range. But again, when you zoom out, Bitcoin's been pretty flat, pretty uneventful price-wise, and therefore market capitalization-wise. Again, that's to be expected during the consolidation phase running up to the halving. This is when those memes where the guy's poking Bitcoin with a stick and says, come on, do something, come into play. That doesn't mean there isn't some excitement from time to time, because you also remember during 2019, Bitcoin rallied up to, I think it was around 10,000 and then dropped all the way back down to 3,000 before slowly trending up to around 10,000 again on the halving, and then coasting up to the new all-time high, to the previous all-time high, the then all-time high of 20,000 on December 20th of 2021, before just having that face-melting, setting this face-melting new all-time high of 69,000. Well, we had the double top all-time high, I think it was April, where we had the Elon pump that sent Bitcoin perhaps prematurely up to 66,000. And then the summer, we saw Bitcoin sink way down into, I think it's sub $50,000 range, before reclaiming its all-time high and setting a new all-time high around 69,000, which is currently the standing all-time high for Bitcoin. But I digress. If history repeats or rhymes, Bitcoin sets a new all-time high about 6 to 18 months, approximately a year basically after the halving. So if that rings true, we should be retaking the previous all-time high of 69,000 sometime in the October or November of 2024 timeframe, and then maybe in December or the spring, January, February timeframe. That's when we'd be talking about brand new all-time highs, and that's when it gets really exciting. If you think the halving parties are going to be exciting, people get really, really euphoric when Bitcoin's on one of those face-melting tears, which is why, Matt Odell made that famous 200K by conference day prediction. Matt Odell tends to be pretty level-headed. The euphoria even got to him. Of course, that was spectacularly wrong. But, the rest is history. So nobody has a crystal ball. Only time will tell. But fun things are going to start happening sooner than it might feel. With Bitcoin going sideways for, potentially almost another year or more. If Bitcoin doesn't reclaim its all-time high until the fall of 2024. That's more than a year from now. So, but not too long ago we were saying it was more than a year until the halving, and now we're less than a year from the halving. So, TikTok next block, Bitcoin marches on, and this is when the work gets done in Bitcoin, and this is that last opportunity for us all to stack. And regardless of whether Bitcoin pops back up to 34 or plunges all the way down to 20 again, all that really matters when you look back on it 4 years from now is that did you stack as many sats as you wish you had when you had the opportunity to buy for less than 69,000? Everybody looking at people saying, man, you're lucky. I wish I would have I wish I would have had the opportunity to buy Bitcoin for only 3,000. That's going to be, man, you guys are lucky. I wish I had the opportunity to buy for only 50,000, 4 years from now. And so you have the opportunity to buy for less than 29,000 right now. So, again, do your own research. You do you. Don't invest any money you can't afford to lose, yada, yada, yada. This isn't financial advice, as they say. We don't do financial advice on this podcast. This is about exploring Bitcoin. We're going to make a Bitcoin purchase today, but that's because we are testing the dollar cost averaging hypothesis, not suggesting necessarily that you do so. Again, we don't give financial advice, but are you going to be kicking yourself 4 years from now because you didn't stack as hard as you could have? Again, that's a decision you're going to have to make. All right, we just spoke about Bitcoin's market cap at $562.4 billion. But for those of you who value your wealth in shiny yellow rocks, you gold bugs out there, you people invested heavily in those Spanish doubloons, the Peter Schiff bucks, it's going to cost you 15.2 of them to purchase just one Bitcoin. That's 15.2 ounces of gold, 15.2 1-ounce gold coins to purchase just one. Wow, you had to have heard that one. That sounded like amazing. That sounds like, wow, that sounds like somebody smashed a car into the fence and then just kept doing it. If you can't hear this lightning, you're missing out because it's really impressive. The thunder, that is. So I digress. It's going to cost you 15.2 ounces of gold to purchase just one Bitcoin. And you know what? Everybody gets Bitcoin at the price they deserve. And right now, that's a bargain compared to what it's going to look like 4 years from now, when it could cost you pounds of gold to purchase just one Bitcoin. For those of you who value your wealth in pizza, one Bitcoin will score you 1,616 large pepperoni pizzas for Papa John's. A heck of a lot more pizza for the Bitcoin than, Laszlo got on that first Bitcoin pizza day when he purchased 2 Papa John's pizzas for 100,000 Bitcoin. Along those lines, $10 will buy you roughly a Big Mac meal in most states. I looked this up because I wanted to know, because I think it's more than $10 for a Big Mac meal here. I don't really eat at McDonald's unless I'm desperate, on the road, on a road trip or whatever, and just need to grab something fast while we're driving. I think it was about $11 for a Big Mac meal. Anyway, the national average is approximately $10. Some states like Ohio, you can buy a Big Mac meal for like $7, and then the most expensive is about $15 in those blue states in the Northeast United States, like Massachusetts and New York. Nonetheless, on average, $10 will buy you $10 will buy you a Big Mac meal at McDonald's, or 34,600 Satoshis. And as a bonus, those Satoshis are not going to make you fat. They're not going to give you a heart attack and clog your arteries. But I continue to digress. Looking at Bitcoin activity on chain, the mempool has currently got about 42 blocks worth of transactions pending. Of course, that depends on whose mempool you're looking at, but I'm looking at Clark Moody's mempool right now, and there are 42 blocks of transactions pending in that mempool. That's way up from the 11 blocks worth of transactions that were pending last DCA Wednesday, but about the same as the 41 blocks pending 2 weeks ago on the previous DCA Wednesday. So not much of a change other than the outlier 11 blocks last Wednesday. I guess it was Thursday because we did the show a day late. However, the estimated fee that it'll cost you to have your Bitcoin transaction included in the next mined block has dropped by about half. Last week, Clark Moody was estimating it would cost you 23 sats per VByte to guarantee that your transaction was included in the next block. And right now, he's estimating that it will only cost you 12 sats per VByte to guarantee that your Bitcoin transaction on-chain, that is mined into the next block. And you can set your fee as cheap as 6 sats per VByte, and that should clear within a day or at least within a week. I take umbrance to that because last week I needed to open a Lightning channel on my node. I can get into that a little bit later, but I needed to open a channel, and I set a 6 sat per VByte fee, and it's been pending for it's been pending for more than a week. Mempool.space is telling a slightly different story as usual. They're saying a high priority transaction should have a 7 sat per VByte fee, which is about 28 cents in US dollar terms. In fact, their high priority, low priority, or no priority are 7s across the board right now. So 7 sats per VByte. Again, my 6 sats per VByte transaction hasn't been mined yet, so I'm thinking about bumping it, but I'm holding out hope that maybe it'll get mined without me bumping it, because I've seen that suggestion of mempool.space fluctuate from 6 sats per VByte up to like 21 sats per VByte and back down to where it's at right now at 7 sats across the board. I've seen a lot of 6 sat transactions get mined, so maybe mine will, and I don't really care if it takes a while, though I'm kind of anxious to reopen this channel. It's a channel I had opened previously. All right, I'm going to get off another tangent. Holy cow, I saw that through the curtains just about a millisecond before I heard the boom. You had to have heard that. That was insane. Wow. Okay, I might have to end this and start recording a little bit later, but if I do that, I'm worried about missing out on getting this published before it's too late. I don't want to end up with another Thursday episode, so I'm going to press on unless it just gets so bad I can't record at all, or I maybe lose the power. Anyway, I had been running a node on a Raspberry, and I had like an old 4 RAM. I had a Raspberry 4 with like 4 gigabytes of RAM, and I upgraded to a slightly more powerful Raspberry. And I was running the node on a 1 terabyte SSD, and it was getting kind of full. It's the with all the ordinals and inscriptions shenanigans, the blocks taking up a lot more space. I was worried about it filling up sooner, so I redid the node, basically everything the same, transferred it to a Raspberry with twice the memory and a 2 terabyte SSD. And in order to do that, I'm using Umbrel on that node, and so in order to do that Basically, I had to start the node from scratch, re-index the blockchain. I entered, the same 24 seed words in, so I have the same Bitcoin wallet, but it'll only let you close your channels and start over. So all my channels are currently closed on that node, and I'm opening one at a time. And I'm reopening my first channel, or have been trying to, for a week at that 6 sat per VByte fee rate. So wish me luck in getting that open. If it's not open in the next day or two, I'll bump it to 7 or higher, depending on what the fee estimators are saying. So the long way around is basically saying, even though they're saying that a 6 sat per VByte transaction will be mined within a day, it hasn't. So if you're gonna lowball your transaction fees like I'm doing, make sure you're doing so in a manner where you can bump that fee. You can do replace by fee, or maybe child pays for parent, or whatever you have to do if your transaction doesn't get mined. All right, now back to that transaction metrics, and the one that I like to follow, Bitcoin's 24-hour on-chain transaction rate, is back up. It's last week it was the last 2 weeks in a row we were looking at an average of about 4.8 transactions per second, and currently, according to BTC.com anyway, there are currently 6.44 transactions per second being mined into Bitcoin blocks, so a significant increase from 4.82. I'm not 100% convinced that this is a useful metric anymore. Again, ever since Taproot got activated, it used to be, prior to that, the on-chain transactions maxed out at like 4 transactions per second, and you'd never see even 4 transactions per second. Basically, anytime you saw more than 3.15 transactions per second, it had indicated that there was a lot of on-chain activity, and and correspondingly, Bitcoin's US dollar value was usually going up. Just something I had observed in the 2 years I was doing this podcast. All that went out the window with the Taproot activation and ordinals and inscriptions. So maybe we'll get a new baseline. I'll continue talking about this metric until it either completely becomes useless or confusing enough to where I can't make any sense out of it, or maybe we'll establish the quote-unquote new normal. Either way, I'll continue to read this metric until I make up my mind as far as that's concerned. What do you think? Send me a DM, a shout out, a boost, whatever, and let me know. Do you find the 24-hour transaction rate useful, or am I wasting your time? The jury's out on that, even as far as I'm concerned right now. Speaking of on-chain, we're getting closer to the next difficulty adjustment. As you know, Bitcoin has a mining difficulty adjustment every 2016 blocks, which is theoretically every 2 weeks, to try and keep Bitcoin blocks being mined at an average of once every 10 minutes. We're currently 873 blocks away from the next mining difficulty adjustment, which is now looking like it's going to be on next Tuesday. Previously, it was looking like that was going to happen on our next DCA Wednesday episode. And perhaps more importantly, it looks like that's going to be an increase, and a big one, anywhere from 4.3% to 7.9%. Maybe those miners are coming back online in Texas as some of this heat starts to wane. As I mentioned, here in Florida, it was 100 degrees all last week, and it's back down into the mid-90s. So if the same thing's happening in Texas, it would stand to reason that the load on the electric grid is reduced now, or reducing, and therefore some of those miners are spooling back up, and that would account for a significant increase in the hash rate again. As a result, blocks are zooming in. They're averaging currently 9 minutes and 16 seconds in between blocks this halving epoch, and that's even a lot faster than 9 minutes and 56 seconds they were coming in last DCA Wednesday. And of course, if that doesn't change, the difficulty to mine the next block will be increased, perhaps as much as 7.9% or more. And I guess we won't know until Tuesday or Wednesday of next week, but it's looking like it's going to be a significant increase to the difficulty to mine the next block. I want to real quick say thank you to those of you listening in your favorite podcasting 2.0 apps, such as Fountain and Breeze. Reminder, you can earn sats for listening to your favorite podcast on Fountain, as well as support your favorite podcast through the value for value model by streaming a sats on either a permanent basis or as a boost, a one-time boost, a boostogram, which is basically a message that you can send to the podcast, and it comes as a lightning message, so there's some sats attached to that. And speaking of boosts, Leggy sent us 5,000 sats and says, nice. What's nice is in Germany is that you don't have to pay capital gains tax when you hold more than a year. Combined with the first in, first out rule, I am always spending sats without needing to track the UTXOs. I'm not consolidating, but always using the small UTXOs. I guess this is in response to I was talking about consolidating UTXOs and whether you want to have a bunch of small UTXOs or a bunch of larger, or a smaller number of larger UTXOs. When fees are really high, for example, if it costs you 50,000 sats to send a transaction and the UTXO is only 100,000 sats, then you'd end up spending half of that just in mining fees. And you know what? German Bitcoiners get it. And that's kind of the way it should be, right? I have a big problem with capital gains tax in general because most of the capital gains people see, whether it's the increase in value in their stocks or their house, is due to inflation. You didn't make a profit if you bought, like for example with gold. If you bought gold at $300 an ounce and now it's worth $1,800 an ounce, you're not making a profit. That gold still has the same purchasing power. The US dollar just got weaker. And so capital gains tax are a particularly insidious theft. But if we are going to have a capital gains tax, Germany does it right, where if you basically are trading Bitcoin and it's your business, okay, fine, pay an income tax on that because you're day trading. Like if you're day trading stocks, if you're trading Bitcoin back and forth all the time, sure. If it's a short-term trade, maybe have a capital gains tax on it, or at least include it as regular income, because short-term capital gains tax in the United States is brutal. It's way more than what you would pay on income that you earn at your job, fiat mining. So we're getting off on a little bit of a tangent here, but it seems that a fair compromise, at least a better situation than we have it in the United States, is the way Germany treats it, where if you hold Bitcoin for more than a year, you don't have to pay tax on your gains. And that's particularly fair. So German Bitcoiners get it. And from what I've seen on Twitter, they really know how to have a good time. I am super jealous of some of the Bitcoin meetups that I see on Twitter and online in general. Even though some of them are pretty small, it might be 5 or 10 guys getting together, 20 or 30 guys getting together. Yeah, they're sitting in like like an old castle somewhere, drinking beers and just having a good time. And we're starting to get a lot more really cool Bitcoin meetups in the United States and even down here in Florida, which always seems to be the last when it comes to, getting on board with what the latest trends are, what's new. And for example, craft beer in 2008, the craft beer scene in the United States was booming. You had a couple of really big national popular brands become big national popular brands like Sierra Nevada and Dogfish Head and some others. But here in Florida, if you asked for a craft beer, you were lucky to get a Shock Top. The craft beer scene just didn't really exist here until about 2009, 2010, and then it really took off. So Florida seemed to lag in trends like that, and the craft spirits were the same way here in Florida. They were way behind the rest of the country. And so maybe that's why we don't have as many really cool Bitcoin meetups in Florida as the rest of the country. And that's starting to change, fortunately. I'd like to see a really cool one here in the Space Coast. I don't know why there aren't any. Maybe it's up to me to do it because, with rocket scientists here, rocket scientists and engineers tend to be tech people, right? I mean, duh. So it would seem to me that a lot of them have to be Bitcoiners, and so there's the potential for something really special here. I mean, imagine hanging out at the Kennedy Space Center under the space shuttle, or in the rocket garden, having a beer and talking Bitcoin with all your favorite Bitcoin plebs. It just seems like that'd be a lot of fun. And I'm on a tangent again because I'm talking about Leggy's boost. So hey, thank you, Leggy, for that boost. And maybe I'll get to one of those Bitcoin meetups in Germany one day because it looks like a lot of fun. And speaking of Germany, the geographic distribution of our listeners is exactly the same, where it hasn't changed at all in all of August. About half of you are the number one country, the number one location. About half of you are listening from the United States, and that makes sense because I'm in the United States, and a lot of Bitcoiners. It seems, even though the Europeans seem to have more fun, the United States is a big country, and there's a lot of Bitcoin activity in the United States. So it just makes sense that half of you are listening from the United States. So thank you to my fellow American plebs out there listening from here in the United States. Number 2 remains Argentina, which is really cool, and I want to talk about Argentina a little bit more here as we continue the podcast. But muchas gracias, amigos, for remaining numero 2, Argentina. Number 3 remains Germany. So I was almost said muchas gracias. Dankeschön, mein Freund im Deutschland, for remaining the number 3rd most popular listener location. Number 4 remains Luxembourg. Again, Dankeschön or Morien in Luxembourg for being the number 4 most popular country for our listenership. Number 5 remains Canada, so thank you to our friends in Canada. Number 6 remains Spain, so muchas gracias in España. Number 7 remains Venezuela, again, muchas gracias amigos. Number 8 remains Colombia, once again, muchas gracias amigos. Number 9 remains Sweden, where again, nobody's reached out to me to tell me how to say hello or thank you in whatever language you happen to speak in Sweden, whether that's a common language or, maybe you moved there from somewhere else and you speak a different language as your primary language in your home. I'd like to know. Number 10 remains Singapore. Again, I haven't heard from anybody in Singapore. You don't have to send me a boost. You don't have to send me any sats. Give me a DM. Send me an email. At Twitter, we're at BTC Bulletin Pod. And my email is easy. It's bitcoinbulletin@protonmail.com. So let me know how you say hello or thank you in your family in Singapore. And the countries below that haven't changed. Mexico's lurking down there as the 11th most popular spot for listenership. Again, the majority of you are listening from the United States, but those Spanish-speaking countries are coming in strong at, way punching above their weight class in the top 10. Of course, it's really cool to see Germany at number 3 and Luxembourg at number 4. It's really cool to see the people listening from all over the world. So thank you wherever you may be listening from. If your country's not in the top 10, hey, get a friend to listen, because it probably wouldn't take too many more listeners to bump you into the top 10. Maybe we can get a country like Mexico to represent, or wherever you're listening if you're not in one of those top 10 countries. But I digress. The reason we're here is because it's DCA Wednesday, and we're going to grow that stack, and hopefully before Bitcoin goes back up in price, because it's currently on sale. But first, I want to talk a little bit about the news, and of course, the news that most people are talking about right now is the price, because that seems to always be the most. There's a lot of exciting things happening in Bitcoin, but people tend to talk about price more often than anything else. And currently, Bitcoin's a little bit, it's on sale a little bit. Of course, zooming out, as I've mentioned, we're basically sideways. And of course, remembering that the 4-year cycle theory, the 210,000 block theory, says we're repeating 2019. And if that continues to rhyme, then a drop all the way down to 20,000 or lower potentially could be coming. But again, no one has a crystal ball. I'm just saying that Bitcoin's doing what Bitcoin's doing. And if we continue to go basically sideways all the way from here to the halving, that's normal. If we see a little bit of a dip or a pop and then a dip, that's normal too. Again, this is that accumulation phase. We've come out of the Bitcoin winter, but we're still in that really long, year-plus long accumulation phase before the next halving. At least if, Bitcoin continues to rhyme with its previous halving cycles. Speaking of money, it looks like Twitter has enabled payments. That was, in the rumor mill for the last couple of weeks of people thinking, hey, wouldn't it be cool if he just implemented Lightning? And other people saying, he's obsessed with Doge, he'll probably implement Doge. And still others saying it'll probably just be Apple Payments. And that seems to be ding, 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 winner, winner, chicken dinner. As it looks like on my app, I was texting somebody and it popped up at the bottom, hey, do you want to send $1 or request $1? And if you look on the bottom of the x.com app, or whatever the hell they're calling it now, where you'd be able to insert a photo or whatever, one of the buttons now is the Apple Pay logo. So it looks like Twitter Payments has gone live. And it's, of course, not Bitcoin. I never assumed it would be. And it's not Doge. And I didn't think realistically it would be either, because Elon likes his memes and he likes to joke around and have fun. But this is, he owns Twitter now, and this is his money coming out of his pocket. And I didn't think for a minute that he would implement Dogecoin, because he needs to turn Twitter around financially and make some money. And Dogecoin was literally invented as a joke. It's literally got an infinitely inflating supply. It was made for fun to spoof cryptos, and it just seems stupid to integrate Doge, because no one was going to use it except for the 2 or 3 Dogecoiners out there, he wants to take over the world, right? He said he wants to turn x.com into basically the WeChat, where people are doing, they're texting, keeping in contact, or buying, shopping on Twitter and sending them, using Twitter as their bank, and he's looks like he's well on the way to implementing those plans, at least by integrating Apple Pay into Twitter. Who knows what he has in store, but that's pretty much exactly what I would have expected. So the lightning is still rumbling out there. It's not as loud as it has been, but apparently I've got a parrot shrieking out there now, because if it's not one thing, it's not another. At this podcast, there's always something in the background, it seems like, and the rain is coming down hard enough that I can hear it on the roof. So at least the thunder hasn't gone kaboom and startled me recently, but there's a good rain pouring down on the roof now, and a parrot out there shrieking relentlessly in the background. I hope you don't hear it, because the parrot is more annoying than the lightning. The lightning was startling. The parrot is just annoying, because it's not doing a Polly want a cracker or hello or whatever. It's just shrieking. All right. Speaking of Twitter, Adam Meister on Twitter has always said use Twitter as a web page. Basically, just go to your favorite people's profiles that you follow and scroll through and read what they have posted instead of reading what the algorithm feeds you. I had to remind myself of that, because last couple times I've opened the Twitter app, I've just started scrolling through what it's been posting and finding stuff that's either outrageous or angering, and not a lot of good content, not a lot of Bitcoin content. And I have to remind myself, oh yeah, don't pay attention, don't be an algorithm slave, as Adam Meister likes to say. If you want to see good Bitcoin content, you've got to go to the profile of your favorite Bitcoiners, some of which are apparently shadow banned again, because I've seen a lot of people posting out there that when I've gone to their page, that nobody seems to be seeing my content anymore. And if you go straight to their page, straight to their profile, and scroll through Twitter as if it's a website, as if you're using the internet, old school, scrolling through websites or scrolling through MySpaces, if you've been around that long, that is a lot less frustrating, and you get a lot more content, a lot more signal, and a lot less noise. Speaking of Adam Meister, apparently he has a new This Week in Bitcoin show out today. I have not seen it yet. It's only a couple hours old, but I always love hearing his takes. Adam Meister at TechBalt on Twitter is an OG, and he has a unique, distinct style that is all his own. He likes to call himself a unique beast. It gives me hopium to hear what he has to say, and he always cuts through the BS and calls it like he sees it. And he hadn't been doing a whole lot of podcasts recently, a whole lot of shows. Back in the day, he did a one Bitcoin show every day, and then every Friday, a This Week in Bitcoin show, and then he stopped. And would only do them if people basically paid him at least $100 or more. That was crowdfunded. You could send him 5, 10, whatever. But once that got to $100, he wasn't going to do a show unless that happened. He's picked up a sponsor or two for a while. The Bitcoin conference was paying him to do shows. Then that ended. I digress. This is my podcast, not Adam Meister's podcast, but I'm excited to see that he does have a podcast. So I'm planning on watching that as soon as I get the show posted, although it's getting a little bit later. So by the time this show's done and uploaded, it's probably going to be time to start fixing dinner. Another tangent, but I have a 4-cheese tortellini I was going to fix tonight. And I've kind of been thinking about what kind of sauce to use. Traditionally, it seems like tortellinis usually have like an Alfredo sauce, a cream sauce. But I was thinking of something a little more zesty, and I've seen some people use like a garlic basil red sauce. And I'm kind of leaning towards maybe doing a garlic basil red sauce. The advice says if the tortellini is really flavorful, you want to use something more bland because you want the flavor of the tortellini to shine through. But I'm thinking tonight I'm going to use a red sauce, a garlic basil red sauce, because I think that'll complement that. If you're listening from Italy or someplace like that, or you just are an Italian food connoisseur or a really good cook, maybe you have an opinion, maybe you can send me a DM on Twitter or an email and let me know what you think about Bitcoin and what you think about tortellini, because I'm kind of open still, and I have the ability to do both. I haven't made up my mind, although I'm leaning towards that garlic basil sauce. Again, that's a huge tangent. So let's continue along the Twitter thread. Out there on the Twitter sphere, out there on Reddit, seems like but what if the electricity goes out forever FUD has been raising its ugly head again, which is just really frustrating, because, if the grid goes down forever, Laura, forever, you got a lot bigger problems than whether or not you can spend your Bitcoin. Bitcoin is probably one of the most resilient technologies out there, but people that say this are kind of ignorant, because you can send Bitcoin transactions off-chain. You don't need the internet where you're at. You just need maybe mesh network access to someone who has access to the internet. So It would be really, really, really hard for Bitcoin to go down everywhere in the world simultaneously and forever. But if it did, you're going to have a lot bigger problems than spending your Bitcoin. For example, if the world went full Mad Max, I'm not trading you food or shelter for your shiny Peter Schiff bucks either. You know, in the event gold were to retain any kind of value whatsoever, and this seems to be a gold bug argument. It's never, I'm not going to buy Bitcoin, I'm going to keep my money in US dollars because what if the grid goes out? Because if the grid goes out, you can't use your ATM card either. You can't write a check. You can't cash a check. You can't go to an ATM. You can't use your Visa card and get your airline miles. You can't use anything. You're going to be bartering. You're going to be bartering like chicken for eggs, bullets for alcohol kind of thing. Your gold isn't going to be useful either if you're a gold bug. For starters, if gold retains any value, there's going to be Mad Max style armed gangs out there, and they're going to come into your house and they're going to take everything you have if you can't defend it, including your gold, and they're going to sit there till the next bigger, more powerful gang of armed thugs comes along, and they're going to get, killed in the house, and the gold are going to be taken from them. You will not be living in a nice house in a nice city, trading your little gold coins for coffee at Starbucks. It's going to be a brutal, ugly world, and about the only thing they're not going to be able to steal from you is your Bitcoin, because whether or not you can communicate on the internet or not, they can't kick your door down and take the 24 words and run. So, that's just BS FUD. It has nothing to do with anything. And if we really get Stone Age, if it really get medieval again, if it gets so bad that Bitcoin is useless, it's going to be every man for himself. And the only thing that's going to have any kind of value is going to be bullets and food. And you're not going to be trading gold coins for a chicken. You're going to be trading whatever you have, whatever you can give to whoever has what you need to survive. So that's worthless. That's worthless FUD. In the non-zero chance that the grid goes down, the world ends or goes prehistoric, civilization collapses, in that case, Bitcoin might go offline. And if it does, you haven't wasted your time stacking Bitcoin, just like you haven't wasted your time, stacking anything else, because nothing is going to matter except for eating and surviving. Back to Bitcoin in a more positive light. A lot of the news out there is about the presidential primary in Argentina. Again, where 11% of you are listening. I'd really like to hear from one of you listeners in Argentina to hear what you have to say about this, but it's incredibly optimistic news. Apparently, a very pro-Bitcoiner has gotten the majority of the votes in the presidential primary. There are headlines out there like, politicians claim that Argentina is set to become Bitcoin haven. That's on tech.com. Another headline on Argentina. Argentina is set to become Bitcoin haven, blah, blah, blah. Inside Bitcoin says, Bitcoin and politics, a closer look at Argentina's presidential candidate, Javier Milei. Sorry if I butchered the pronunciation there. On the FUD news is, depending where you get your news, he's either being contrasted as a libertarian or a far-right extremist. For example, Yahoo Finance says Javier Milei is a libertarian candidate who has abdicated for the elimination of central banks and spoken favorably of Bitcoin, whereas Crypto on the Street says Argentina's far-right pro-Bitcoin candidate, Javier Milei, has won a primary contest in the South American country. But the nuts and the bolts of it is, at least according to an article in CoinDesk, Milei has said in the past that, quote, the central bank is a scam mechanism by which politicians cheat the good people with inflationary tax. Milei, that is absolutely 100% true, whether he gets it or whether he's using it as a campaign, slogan, platitude, so to speak, who knows? We have a similar thing going on in the United States where we have like 4 candidates running for president. Some of them are pro-Bitcoin in a little more convincing way than others, but you never really know with a politician whether they're just pandering to get votes or not. Because, for example, here in the United States, RFK Jr. is saying exactly all the right things. So if he's not lying, he's potentially one of the most pro-Bitcoin people out there. But again, he's a politician, and politicians lie frequently. So, pay attention to what they do, not what they say. But it's good news to see that a potentially really pro-Bitcoin candidate is running for president in Argentina and has a decent shot at winning. The article continues to say, with no candidate likely to obtain more than 45% in today's polling, a general election among the winner for each party will be held in October. So he'll be in that runoff. If no one receives 45% in that vote, a final runoff will be held in November. So in the United States, for example, RFK Jr. has a chance of winning the nomination, the Democrat nomination for to run for president. If he does, then he'll run in the general election against whoever the nominee from the Republican Party is, whether that's Donald Trump or someone else, like Ron DeSantis, or who knows at this point in time, because the primaries are a ways out. It seems to be kind of similar to how that works. You have primaries where the parties put their best shot forward, and whoever wins for the parties moves on to another election, potentially two more elections, as opposed to the United States, where we only have the primaries and then a final winner-takes-all election. If there's two candidates or a third-party candidate, nobody has to get a plurality. In fact, fun fact, Bill Clinton never won a majority of the votes. He had the highest vote total, but both elections there was a third-party candidate. Ross Perot took more than 10% of the vote, allowing Bill Clinton to come in with like 40% of the vote. So normally, to be elected president of the United States, there's only two people running. There's always a fringe candidate or a write-in candidate, a small party candidate like the Green Party or the Libertarian Party that never get more than even 1% of the vote. So usually the president of the United States wins with 50% of the vote, and that's just the way it is. But in other countries where multiple parties run, it's not unusual to see someone get elected with only 30% of the vote, for example. And that may end up being the case in Argentina, and it would be really cool, potentially, if the pro-Bitcoin candidate Javier Milei is that president, because Argentina's had an interesting political and monetary history. Obviously, everybody knows that they've defaulted multiple times. In fact, there's never been a 30-year bond come to maturity in Argentina because they've defaulted more often than once every 30 years. They've gone from, the Don't Cry For Me Argentina days, the Evita Perón days, to maybe a little bit more of a capitalist revival for a while, and then back and forth. I'm not a huge expert on politics in other countries, but from what I know, this would be a huge positive development, especially from a monetary standpoint, because people in Argentina, it seems, they just get used to inflation. It's just a fact of life. Just like it's going to be hot outside in the summer, your money's going to deflate in Argentina. And wow, how cool would it be if Argentina becomes the next country to really embrace Bitcoin? Maybe not full on, legal tender like El Salvador, or maybe full on legal tender. Who knows? Hey, you people listening in Argentina, shoot me a DM, shoot me an email, at BTC Bulletin Pod at Twitter, or BitcoinBulletin@protonmail.com. Give me your 2 cents. If you're feeling really generous, send me a boost. Let me know what you think is going on in Argentina as far as the presidential election goes, because only you really know. We can sit here in the United States or Germany or Argentina, and Argentina is going to have the best view, right? Because you're there. We're just reading about what's going on, and you know what's going on because you're living it. I mentioned RFK Jr. RFK Jr. was on Tucker on Twitter on Monday, and he gave some pretty compelling insight into the war in Ukraine, Ukrainian biolabs, whether or not the CIA was involved in the assassination of his uncle John F. Kennedy, etc. They didn't really talk about Bitcoin a lot, but RFK Jr. is a well-versed, if nothing else, supporter of Bitcoin. He's vowed to eliminate capital gains on Bitcoin in the United States if he's elected. He said something about maybe partially backing the US dollar with Bitcoin, not necessarily going on a Bitcoin standard, but buying Bitcoin to help back treasuries, etc., which is a positive step forward. Just the eliminating capital gains tax in the United States would be a huge, huge pro-Bitcoin development. So I'm not sold on RFK Jr. I'm old enough to remember him from way, way long time ago, and he did some pretty goofy things. And I'm not even talking about the vaccine-related stuff. I'm talking about some weird stuff he did in the 90s. So I'm not sure if I like RFK Jr. or not. I guess I'll have to see who ends up getting the Democratic nod and the Republican nod and make my decision then, based on who the candidates running at the time are. But I'm cautiously optimistic that he believes what he says, that he's not just pandering for votes. Or even if he is pandering for votes, he will know that it worked, and he better make good on his promises, because that would be really cool if Bitcoin becomes capital gains free like it is in Germany after a year anyway. That would be a boon to Bitcoin, because I know a lot of people, even people that are plebs, that are stackers like me, are gun shy about using Bitcoin because you don't want to have to worry about reporting it on your income taxes and paying capital gains taxes on it. all the nightmare it can be to track your UTXOs, as I mentioned in the last episode. So who knows? In the meantime, attempts to regulate and bring Bitcoin to heel are full speed ahead of the United States, with even Wyoming Senator Cynthia Lummis, who seems to be a friend of Bitcoin, signing on to the latest bill attempting to regulate Bitcoin and to thrust KYC into Bitcoin and make it harder for people to use in the United States. People always talk about the first they laugh at you, then they fight you, then they join you thing. And I've always said we're in the then they fight you stage in the United States. Our politicians might act stupidly, but they aren't stupid, or at least the people who advise them aren't stupid, and they know they cannot stop Bitcoin. And how they're gonna try and stop Bitcoin is by making it a pain in the ass to use, and that's why their burden of the capital gains reporting is there. That's to make it harder to use. They're trying to they know they can't make it go away, but if they make it a pain in the butt enough, difficult enough, the average person won't want to touch it. And the real threat is, at least in the United States, that they continue to try and make it more and more difficult. The hope is that Bitcoin adoption outpaces that it gets so entrenched that the big money, the interests that get to influence politicians become Bitcoiners, or become so invested in Bitcoin that they lose the battle simply because Bitcoin takes over first, and they just can't stop it. They can't stop it. Bitcoin will always be there, and the talent and the money will flow to the countries that are more favorable to Bitcoin. And all they can do is drive adoption down within the United States. But I think it's looking like, for example, if one of these ETFs gets approved, the institutional money is already coming. If BlackRock's ETF gets approved and BlackRock is making money hand over fist, BlackRock has a lot of influence in the political system in the United States. So, it's that sort of thing that gives me hope that our government will eventually do the right thing, even if they don't want to. Like that quote that says the United States always does the right thing, but only after every other option has been exhausted. I don't remember whether that was Winston Churchill or whoever said that, but it is absolutely true. Speaking of which, there was a really funny meme. I think I saw this back on August 9th on Twitter, so it's more than a week old. But it's that Louder with Crowder meme where he sits there with his mug with the change my mind thing, and they've superimposed Dorian Nakamoto, the face, he was outed as being Satoshi Nakamoto briefly, falsely, obviously, a few years back. So, the Dorian Nakamoto's face is superimposed on Steven Crowder, and the sign says, "The people who want to ban Bitcoin are the same people that Bitcoin protects you from. Change my mind." And that is 100% on. The people that want to ban Bitcoin because they know, as Christine Lagarde has said, Bitcoin is an escape hatch. It's a lifeboat. It allows you to subvert their control. And authoritarians want to control every aspect of your life. The easiest way to do that is by controlling your money. And Bitcoin fixes this. So, but again, I think they still underestimate Bitcoin. They underestimate the power of Bitcoin. And Bitcoin doesn't even have to get to hyper-Bitcoinization for it to just become influential enough that it becomes its own force. It's like a big enough fire generates its own weather. It takes dry, windy weather to create a huge fire, but once you have a big enough fire, that fire creates its own dry, windy weather. And Bitcoin's going to be that fire. Hopefully Bitcoin gets big enough and strong enough that it creates its own weather, that it influences politics instead of politics influencing it. And we're closer to that happening than a lot of people might think. Maybe this next cycle will be it. I'm not one of those this time is different guys. I don't think that we're going to break out of the 4-year halving cycle this time. I think it'll happen eventually, but I think we have a few more halving cycles of that 4-year halving theory taking hold, doing its thing before we just go up into the right forever without a cycle, without the 4-year, without the mining, without the mining halving, the miner reward halving, creating the supply shock that affects the price of Bitcoin. We spoke, maybe was it last podcast, that the 13th of August was going to be the SEC's deadline to approve or reject Cathie Wood's 21 shares Bitcoin ETF, and even she was saying she expects them to not approve it, but not reject it, because as is typical of a large bureaucracy, even though they have a deadline, they have the power to extend that deadline, and they have the power to extend that deadline all the way till January. And they didn't wait until the 13th of August to do that. They did so a day or so early. with the headline on August 12th, Kathy Wood's ARK 21 shares Bitcoin ETF application decision pushed, delayed basically. So the SEC did exactly what everyone is anticipating they would do, whether that's so they can approve the BlackRock ETF first or whether it's because they're just going to deny all of them remains to be seen. We won't know until next spring. But hey, that decision's going to happen right before the 2024 halving. And if it's a decision that approves those ETFs and big players like Kathy Wood's ARK Investments or BlackRock or Fidelity or whoever start snapping up billions of dollars of Bitcoin to sell their Bitcoin ETF product to normie investors, that's gasoline on the fire for the supply shock that we're already going to experience because of the minor reward halving. So things could get interesting. I still don't think we're going to break out of that supply shock 4-year halving cycle, but we might, or we at least might see a cycle that is just even more face melting than the previous cycles have been. Also on Friday, Yahoo Finance read the headline, "Rising oil prices are about to become a problem for the stock market." Stock markets jumped Thursday after the latest consumer price inflation data for July revealed a relatively tame increase of 0.2%. We're going to get into gaslighting a little bit, but the gaslighting out there has been inflation actually increased, but that's a decrease because overall the trend is downward, even though it's not, right? What I'm seeing here and what the headline actually kind of hints to is that oil influences the cost of virtually everything. Everything is either shipped in trucks, even trains, that burn diesel to power their electric locomotives, boats, cars, trucks, whatever, they burn petroleum, and a significant portion of the things you use are petroleum based. It literally takes oil to make them. Even if we don't burn oil, if we don't turn oil into gasoline and burn oil to power our cars and our boats and ships anymore, if everything goes all electric, you still need oil to have shoes, to have a television, anything made out of plastic, the tires on your electric car, are petroleum based. But more importantly, the cost of oil is a huge driver of inflation. So we've basically drained the Strategic Petroleum Reserve. The United States has vast quantities of oil in underground caverns that they store basically in case of World War III, so that they'll have enough oil to fight the war. And they've used that for political purposes a couple times, not the least of which was Joe Biden drained it to try and manipulate the price of gas at the pump down, heading into the midterm elections, and even a little bit afterwards, trying to keep the price of oil down, because if gas was $7 a gallon, he had zero chance of getting reelected because people would rightfully blame him for the increase. But now that play is done, and so buckle up, Buttercup. We can no longer try and artificially keep the price of gasoline down by selling all the oil that we'd saved up in case of a catastrophe or a war. And so if the cost of oil and the cost of gasoline goes through the roof, inflation is only getting started. But nonetheless, the gaslighting continues. The whole "this is the best economy in 50 years" BS continues in full force, despite all the evidence to the contrary being so blatantly evident. I mean, all you have to do is go shopping to realize that, even if you're Bill Gates, even if you're uber rich and it just doesn't matter how much money it costs for your groceries, you notice if a basket of groceries went from $100 to $200. You might not care, but you notice that last year it would only cost me $50 or $100 to fill up this grocery cart. And now that chicken is, $7 a pound instead of $1.99 a pound, or that steak you used to purchase for $8 a pound is $26 a pound, even if you don't care because you're super wealthy, you still notice. It's still evidence that the average person sees that is irrefutable. And they can lie and say how great the economy is all they want. Part of which is because they're saying, look at consumer spending. Consumer spending is up, so therefore the economy is doing good, right? Well, of course consumer spending is up if the cost of groceries is doubled. You gotta eat. People are putting groceries on freaking credit cards. People are taking payday loans. People are financing buy now, pay later on food. So, of course, the amount of money they're spending is going up because they have no choice. Things have gotten more expensive. They have to eat. That doesn't mean the economy is thriving. Quite the opposite is obvious to anybody with a brain, obvious to anyone who's struggling to fix dinner tonight because groceries have just gotten that much more expensive. And speaking of Yahoo Finance and gaslighting, well, the evidence is right in our faces. Just yesterday afternoon, minutes after every major stock index closed significantly down that day, I want to point out to you that the article was talking about the stocks were going up. Well, they didn't. For example, the S&P 500 went down 1.16%, Dow went down 1.02%, NASDAQ went down 1.14%, Russell went down 1.29%. But immediately under that ticker is the headline, Wall Street gets bullish as soft landing chatter intensifies. They show the stock market down more than 1%, down big time. If you're fully invested in the stock market, you lost 1% of your net worth yesterday. And right under that ticker, the headline, Wall Street gets bullish. Wall Street gets bullshit is more like it. But I digress. Finally, the icing on the cake, y'all. Yesterday was the 52nd anniversary of Nixon, quote unquote, temporarily suspending the convertibility of US dollars into gold, officially ending the gold standard. And it doesn't take a rocket scientist. In fact, anyone who doesn't see the link between this and what's happened to our economy in the last 50 years, all you need to do is visit the website WTFhappenedin1971.com to see a whole lot of really compelling evidence that shows how the economy was going in all kinds of metrics, from the cost of housing to wages versus inflation. And there is a massive pivot right at 1971 in all of those charts that is just undeniable. If you haven't been to WTFhappenedin1971.com, as soon as you're done or while you're listening to this rest of this podcast, go there and check it out. It's pretty convincing. It doesn't take a rocket scientist to see the link. All right, back to why we're here. We're here because today is Wednesday, and Wednesdays are DCA Wednesdays. And if you don't know what DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this is going to be our 108th stack. We started stacking every Wednesday back on July 28th, 2021, more than 2 years ago. So far, we've stacked 107 times. We've converted a total of 2,140 stinky fiat dollars, including $48.15 in fees, into 7,409,569 sats, and we've done that just $20 at a time. So our equal portion we chose is $20. I wanted to keep it simple. I wanted to keep it attainable. You know, pretty much anybody should be able to come up, most people should be able to come up with $20, even if that's a lot of money where you live. For most people, like I just mentioned, that's 2 Big Mac meals, right? That's a couple of drinks. That might be just 2 beers after work. A couple packs of cigarettes, whatever the case may be. It's not a gigantic stretch. I wanted to do a total that was feasible for pretty much almost anybody. Of course, if that's not a lot of money to you, hey, you do you. Pick a number that's a lot higher. I wanted to keep it simple and keep it inclusive for as many people as possible, so I chose $20. And our regular interval is Wednesdays. That's weekly. Most people that get paid in the United States from a regular fiat mining job get paid every other Friday, bi-weekly, every 2 weeks. So, you know, if that's the case, maybe you do your DCA every other week. That's up to you. Again, that's a you do you thing. What's important is that it's an equal portion at a regular interval. Again, that's, you know, a decision you make, a do your own research kind of thing. But we've shown that in just over 2 years, we've been able to amass 7.4 million sats at just $20 a week. And we did so at what's now an average cost basis of $28,881.57. So pretty much, you know, just a little bit less than what the current price of Bitcoin is. But certainly a heck of a lot less than what Bitcoin will be, certainly a heck of a lot less than what Bitcoin will be worth when we eclipse the previous all-time high of $69,000 per Bitcoin. To grow that stack, as usual, we're going to use the handy-dandy Cash App. I use the Cash App because I think it's one of the easiest ways to stack sats. May or may not be available where you're at. So again, do your own research. Stack however you choose with the app or the exchange you feel most comfortable using. If you decide you want to use Cash App, though, they are not a sponsor of the show. Everybody that uses Cash App has a custom referral code where they can help spread the love to friends and family. And we have a referral code in the show notes where if you click on that link and sign up to Cash App using that link, you'll get $5 free just for doing so, and the podcast will get $5 too. So you'll have a really easy way to stack sats. You'll get paid $5 to do so, and you'll help support the podcast. So if nothing else, you'll get paid to help support the Bitcoin Bulletin podcast without even having to send a boostergram. All right, so I've got Cash App open. I've already got $20 in there because somebody owed me $20 for something I picked up the other day. I'm tapping on Bitcoin, tapping buy. Hey, $20 is an option this time. And one of my pet peeves is they mix that up. Half the time I have to manually enter 20, but I digress. Click confirm. And boom, just like that, we've purchased another 67,637 sats, and that has brought our stack up to 7,477,206 sats, and it has raised our average cost basis by about $6. So our average cost basis is now $28,887.80. Still a little bit cheaper than what we just purchased at. We bought at a base price of $28,904.26. But as I mentioned many times, Cash App does charge a 2.25% fee. So with that 45-cent fee, we purchased it effectively at a price of $29,569. So that raised our average cost basis up, even though we bought for only $29,904. But again, when I transfer this Bitcoin to my hardware wallet, they're going to let me do so without a mining fee. So it all comes out in the wash. Every app has to make money, so they all have either a fee or a spread or multiple fees or some way they make their money. I think the best bang for the buck for me is by using Cash App, because that 45 cents we spent is less than basically what we'd spend to transfer to the hardware wallet later. So it all comes out in the wash. All right. Just as I finished this podcast, the parrot stopped shrieking and the thunder stopped banging and the rain stopped falling on the roof. All the distractions are gone. But I'm out of things to talk about. I've already used up most of the time I had allotted to talk to you today. So thank you again to those of you who have been listening. Thank you to those of you who have helped support the podcast. Again, you can earn sats just by listening to your favorite podcast on Fountain. I was actually receiving 8 sats per minute for the first hour of podcasts I listened to yesterday. I listened to about an hour of Bitcoin Audible, and I made a couple hundred sats for doing so. So even if you don't feel like supporting your favorite podcast, if you're not going to get rid of, if you're not going to let go of any of those sats, help support Podcasting 2.0, the new way to listen to podcasts, and make a few sats for doing so. If you enjoyed this podcast, you thought it brought you value, though, please consider sending us a shout out, sending us a boost, shout out as a boost. You can let us know what you thought about the podcast. Maybe let us know how to say hello in whatever country you happen to be listening from, and support the podcast while doing so. Either way, please consider following us on Twitter. On Twitter, we are at BTC Bulletin Pod. The more Twitter followers we get, the more people we're going to help expose to this podcast and hopefully help Orange Pill, or at least send me an email at bitcoinbulletin@protonmail.com and let me know what you think. However, if you just want to sit back and listen and don't feel like reaching out or helping support us, we will see you next Wednesday and every Wednesday for our next DCA Wednesday episode, where we continue to grow that stack $20 at a time. But until that time, keep on stacking those sats, you sexy sat stackers.